Hello, everybody. Welcome, viewers from investing.com. Today, how are you? Hello, face regular warriors. How are you guys doing today? Everyone doing okay? Okay, so I remember we were here last Thursday and I talked about what we're doing here was consolidating losses, not gains. So we've had a pretty ugly week, but look at this candle here. It is possible that we're going to hold here and get another push up. If we had a equal move, this was 160. This would take us all the way back up to 2980 if we have a quality here. So we'll see what happens. Of course, it doesn't change the bigger picture. We're trying to hold the 200-day, got through it and closed underneath it last week, and we've had this recovery. A lot of tweet bombs going off here. I would say under today's low, 2,700. This is one of the targets before this is over. And then, you could go to a weekly where you have something like a megaphone formation, which this is what the super bears, well, maybe not the super bears, but people that are pretty bearish going into year end think that we're going to attack the lows that we had last December right above this 2,300. So as you can see, it looks like a megaphone, something that Rudy Valley would sing out of. A vodio do, a vodio do, vodio do, do do. There's your megaphone. And what's the market's singing? The market's singing instability because this is one of this broadening formations, one of the most difficult to trade because everyone gets bearish near the lows and bullish near the highs. So I thought I'd lock this. Okay. Anyway, you get the picture. There's your megaphone. So when you look at it on a weekly basis, we're still underneath the 2-week off numbers. It'd be the second week in a row. For it to reverse back to the upside by Friday, we need closes back over 29.27. That's still 60 handles from here. So to me, it looks like Wile E. Coyote sitting on the cliff, and back under 2,800, there's big problems. And so this would be a change. The beneficiaries, of course, have been bonds. This was something I was wrong about. I didn't expect this much in the bonds and yields. I was actually looking for them to turn. So here's your TLT. Wow. Can you say parabolic? Okay, so I got bearish right here and caught a little pullback, then sold a retrace and then got stuffed. Okay, so some of the people that were calling this bull move, 150 is a target. I think we have some type of fib extensions up there at 150. Let's see what the monthly shows. So I wouldn't be buying bonds here. Okay, so we'll see where the 1.27 is. But you look at this, where's my RSI? That's not what I wanted to do. Okay. So really not confirming here. It's definitely an explosion. Everyone's talking about maybe even in the US, we go negative rates. And the other beneficiary of this has been gold. We had a nice little reversal from 1535 this week. And 61.8 is about 51.80. So, it wouldn't be unusual to see it pull back towards 1480. I look at this short term, and I might take an attempt up here at a new high, looking for us to trade back to the throwover line here. Silver is still looking a little stronger. Let's see what this looks like. Yeah, silver almost made a new high. As you can tell, we're not confirming up here. I know people say, don't let go of a winner, but, we've had one heck of a run when you put it in perspective. And there are even some eliticians that are saying that what we have here in gold is possibly a big selling opportunity because we're retracing this. We've gotten through the 50%, so we'll see what happens at 61.8. But some of the bears are saying, this breakout's going to give way eventually. You won't know till we're back under 1370, 1380. Euro pound, something I talked about on Tuesday. Um, we've had a very nice reversal in euro pound. And this was, I said, take a picture. Here's a 1, a 2, and a 3. Of course, I covered here. I'm not here for this candle. But I thought it might be natural to pull back to the breakout, 90 and a half, 91, 91 and a half. I don't think this is done, but we could have, well, the pullback's beginning in earnest here. Oil has been acting pretty good, trading hand in hand. I think oil actually looks pretty good. And a lot of people that are bearish, I look at how well it's held up this week under pressure from the stock market, and we start penetrating the 6.5 level. I think we could revisit the $60 level. So those are some of my views. And I think what the market could use if we're going to hold here would be a decline in the dollar. That would might take some pressure off the multinationals, and I'm trying it here. We had this break. I'm discounting this candle. I don't know what this aberration was, but just measuring my fibs from this 170-point decline, we got to 50% last night, and yesterday afternoon starting to pull back. Need to get under 97.60, but if we had just equality from here, it's going to take us to the low 96s, and if we have 1.618, there's TLT. If we have 1.618, that'd be about 270 points. That would take us down to 95.30, and that might be enough to really shake out a lot. That would take out this 96 low. I have a speed line coming in here, 95.30, and then we get the crunching dollar rally, panic buying dollar rally from down there. So my view is the dollar peaked, at least short term, may not be the high, it's a high, and looking for a 96 to be taken out on the dollar. 60 handles is nothing these days, you're right. Winchester Cathedral, you're bringing me down. Is that the one you want, Forex gal? Okay, so we have Mr. Harmonics here, and no, he's not going to be playing the harmonica, but he's an artist when it comes to harmonic formations in the market. So I, look forward to hearing Andre Cordosos is going to be with us. So stick around for that. Also, a pretty good guest. Actually, not a pretty good guest, an excellent guest. We have Ben Maldonado with us, and last time Ben was on, he said, "Go with the gold breakout over 1380. Good call." And then he was showing some fractal or analog of the S&P. I think it was during the Nixon era that could play out here in the Trump era. So we'll get an update from Ben at the top of the hour. And without further ado, I hand it off to my friend and one of the best traders I know, Blake Morrill. How are you today, buddy?
Hey, good morning, Coach.
Hey, buddy. What's new?
We're getting some volatility here. I've got a lot to show, but we actually have a lot to do today. We have retail sales coming up.
Okay.
That's one. But why? Where is? I selected that. Oh, hold on. That's why. Okay. Can you guys see my charts?
It's coming up now, Blake. I thought maybe you caught my low-tech-itis.
No, somebody was raising their hand or something. I couldn't
Yeah.
get to the share button.
Put your hands down, everybody.
No, can you guys see that?
Yeah.
Okay, so there's actually quite a bit happening right now, and the euro found a little bit of support, but the cable is breaking higher.
Yeah.
And watch the cable here. I mean, this is we're up against some good resistance. This is like previous, triangle breakdown, hit channel support.
DSI is 12, Blake, I think 12 or 14.
Yeah, it's definitely getting a lift, a little bit of a squeeze today, and I think we got to keep an eye on it because the cable might be able to squeeze up towards 122, 123 today. There's no specific news, I don't think. It's just more, probably a little bit of a dead cat bounce maybe on the cable. I'm actually playing a little bit to the long side right now. I bought, a tad bit. I bought some euros but they're small because we do have retail sales coming out in here in about 20 minutes. So what I was going to do, Stelios is not going to be with us today. He is uh, um, uh, at church, which Stelios is with his wife at church for some religious holiday in Greece. I'm not really too sure, and even though I was baptized Greek Orthodox to get married in Greece. For those of you that don't know that, I was married in Greece in 2003, and I had to be Greek Orthodox to get married there.
I know what church he's at. It's a church that worships silver coins and bars and bullion.
Yeah, either that
Church of
is
Silver Bullion.
Church of Uzo, maybe. I don't know. Anyway, what I was going to do, because Andre is coming today, I want to get through these majors, and
the bias chart. Okay.
Yeah, I want to do the bias chart today. For those of you that don't know this, this is something that I did for many, 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 like over 10 years with our Wise Trade traders back when I was with the Wise Trade group and MB Trading and eventually Ally Financial. And I do this every morning with all of our traders. Now, Paul Franco, who's SPZ trader, he does this during the European crossover for the day, and he performs the same type of bias chart. And if you're part of the ForexAnalytix community, you can listen in to what he does, every day. So, and he does this. Now, this is a really, really, in my opinion, probably one of the best processes to go through every day, whether it's with me or whether it's with Polly or whether it's just on your own, is coming up with what are the key levels of support and resistance in the markets. In this case, we're going to do the majors that you need to be aware of throughout the course of the day. It doesn't necessarily mean, like, if I put in a bias that's bearish or bullish, doesn't mean that I have to be bullish or bearish that day. All I know is that currency pair may be trending in that direction, and I tend to trade counter trend from time to time. So it doesn't, it just means that if I'm going counter trend, that I have to take smaller positions, and that's what this bias chart is all about. So I'll give you an example. Let's start off with the euro dollar. So in the euro, many of you might say, well, the trend is down. I actually think this is just a sideways trend, and I think the false breakdown from 2 weeks ago has left the bears kind of hanging. So I think we're in a neutral trend now. Support right now is holding at the 50%, but I think really key support is going to come in at 111.11 or 111.10. I think that's key support. That was the breakdown point. That was the point that actually reversed right here. You can let me see if I can make this a little bit thicker. That is a real key level support. That's also a 618 retracement of the low here to the high. Now I know we're holding the 50%, and intraday we may have support right now at 111.30. I could do this. 111.10 is key support. 111.3. Let's get rid of this. Okay. So 111.10, 111.30, those are two levels of support today that I think we need to be watching. Now, I put an asterisk next to 111.11 because I think that's really critical support. Let's take a look at resistance. Now, resistance today, intraday, is going to be 111.70 because it's this previous support right through here. So my opinion is if we break through that resistance, that's going to give us a little bit of a squeeze. So 111.70 is resistance. So now in 111.70, and I'd say the bias is a neutral bias. Some of you might say, it's bullish, or it's bearish, but I think it's more neutral, as I explained to you guys a little bit earlier. So I think you can, trade either side and, not be too terribly, you just have to be kind of like even keel on both sides. I'm going to go over the cable, and I think the cable's in a bearish trend. If you decide to buy the cable, like for example, I'm long a little bit of sterling right now. I'm trading smaller because it's in a bearish trend. And so to give you an example, here's a cable. I mean, we're in a bearish trend right now. Now, can we go counter trend? Can we move counter trend? Sure, I think we can. And I think this resistance today is at 121.50. That's this trend line of the previous triangle. That's going to be really key. So I'm going to put in 121.50, and that is a really key resistance. If we break that, we could go make a counter trend move, and I think you have to just be aware of that. I think that it is entirely possible that we make a counter trend move. But if you decide to be bullish, like I'm trading a little bit to the long side, once we broke that 121, I'm long a little bit. I don't want to be long a big amount because I know it's going counter trend. Now, support on the cable, you could say it's back at 121 right now. Okay, and that's some minor support, and below that is actually 120.50. I think it's 120.50. Yeah, so you can go, even if you want to put in a 120.50, and you can see we have a little bit of support down there. 121 is another level of support. That's what I'll be watching today in the pound. Let's go over to the Aussie really quick. I'm trying to do some of this before we get this retail sales data, which is going to be important today. The Aussie. Now, I think the Aussie has very significant resistance right here. We have 68.20, but really 68.30 is really key resistance. We are in definitely a bearish trend in the Aussie. 68.30. I think this is really critical resistance support for the Aussie. I mean, let's take a look at this and try to be a little bit more granular with where support's at. Take this low to the high. You see the 618 comes in right here at 67.32. Our low was 67.35. So, all right, 67.35 is support. And that's the 618 retracement right now, and that's that's going to be some pretty significant support, I think. But at the same time, you got to realize that while we're below 68.30, I mean, it's bearish. I mean, the Aussie's bearish. You know what? Before we get into any more of these majors, I do want to pull up another currency pair that I've got my eye on. This is the pound yen. This is an inverted head and shoulder pattern. You guys can probably see it, right? There's the neckline. This is the extension if we get a move. Let me grab a pen. And this could happen really quickly. That's why I wanted to bring this up before retail sales. You can see this is the shoulder, head, shoulder, right? And the pound yen, let me delete drawings, erase. Oh, no. Sorry, I'm just trying to figure out clear all drawings. There we go. And let me go back to mouse. Just grabbing my drawing tools, guys. There we go. Okay, you guys can't see that, but I can. One of the things about the pound yen is the pound yen's been beat up, really beat up. But it's I think the risk is starting to build that we get a little bit of a short squeeze. Not like the pound yen is going to reverse course completely. I don't have any news that could really quantify that type of action. However, doesn't mean that we can't get counter trend moves. And I think the pound is set up for some possible counter trend moves today. All right, let's go over to the Kiwi, because I'm going to continue on with our majors here. So the Kiwi's in a bearish trend, obviously. We're struggling with the 2018 lows here. We made new lows for 2019, but we haven't been able to revisit that spike low. I think right now the support that's held for the last couple of days, and let's go over to the 4-hour chart. Support that's held the last couple of days is pretty significant right now, and that comes in at 61 or 64.20, excuse me. Below that is 63.76. Hold on, let me turn down my speakers from my office. They're all jibber jabbering over there, yammering away. Let's see, 0.67. What did I say? Oh, 63.75. 63.75. Okay. Those are like two that you got 67 or 64.20, 63.75. And then resistance is key right here. I mean, as long as we're below 65 cents, you know, it's hard to be bullish. We are definitely bearish right now. But, you know, the fact that we made a higher low could give this currency pair a possible lift higher. So, you know, just, you know, if we end up breaking to the upsides because we stop making lower lows, and that's something to just pay attention to. 65 cents is resistance, and you can see this is all this previous support down here, real close to it, but 65 cents is going to be key. That is key. Okay, we are in a bearish trend. Let's see if we can get this Canadian out of the way. And I'm going to do the Canadian and the dollar yen before the data. And then after the data, we'll have to, well, we'll revisit. Here's the dollar Canadian, and resistance right now. Take a look at this. So here's the high. Here's the low, right? 618 comes into play right here at 133.54. That is a rough channel resistance. Channel resistance is that is trendline support, channel support. Like I said, that's kind of a rough resistance level, but really I think resistance comes in at around 133.50. So 133.54. And taking a step back, the dollar Canadian is range bound. I mean, you could say it's been bullish over the last, week and a half, but it's really more or less range bound at the moment. Okay. And support right now is going to be significant at 132.50, which will be this channel support right through here. And again, this could be off a little. You may draw it like this. Okay. But then that would bring this upper trend line down, like this a little bit, but still, regardless, 132.50-ish is going to be support. And I think I explained this to you guys yesterday. Look, the dollar Canadian has been pretty choppy, and it hasn't given me a whole lot of it hasn't given me a whole lot of opportunity. I'm just not like extremely excited about the U.S. dollar Canadian right now. There's nothing set up here that has been particularly attractive from a technical standpoint. So, I've left it alone quite a bit. Now let's take a look at the dollar yen. So the dollar yen, it's been a lot of volatility overnight. I mean, if you look at like just an hourly, dollar yen was performing pretty well yesterday. I actually was long the dollar yen yesterday. I took it off for just a couple of pips last night before I went to bed. Then we spiked up. Of course, I missed this move. We spike up nearly 100 pips. We came slammed back down. Then there's, more, China headlines, that push the dollar yen back up. But one thing that I want to point out here is if you take this low, okay, to the high, right? Right here, that spike high. This is the 618 retracement. And I was playing the dollar yen on the long side yesterday down here. And I took my profits, and it wasn't a lot. It was like maybe 10, 12 pips or something. And I said, screw it. I want to be able to sleep overnight. I don't want to have this position, which of course, I took it off and then, rips higher. But I think this is going to be pretty significant support through here. This is all really, really key support right through here. So I'm going to write down 105.70, okay, as being support. 105.70. Now resistance, you might say, well, where is resistance? I'm going to tell you frankly, while we're below 107, it's hard to be like, long and bullish. All right. So 106, this previous support here, you can see it right here. Okay, that previous support comes in at 106.80. You can see every spike above 106.80 just gets swatted down. Today we spiked to 106.80. We got swatted down. We have to get above 106.80 in order for this thing to turn bullish. So 106.80, and for it to get a squeeze. But and I'm going to stop here for a second, and I want to say we're range bound because the dollar yen has just been like a floppy fish all over the place. One of the predominant drivers in the dollar yen, in my opinion, is going to be the one of the dollar yen, or the dollar yen big driver is going to be gold and bonds. Okay, and if you take a look at the bond market, let's just take a look at the 10-year, and I look at more of the yield chart, which here's your yield. Okay, yields have been like just getting slammed, and you can see the 10-year. I mean, the 10-year has just been moving up, and we're near, I believe, lifetime highs in the no, we're not at lifetime highs. I'm sorry, I'm thinking boons. We're at the 78% retracement of the 2016 high to the low of 2018. We're at the 78% retracement, very divergent relative strength, 261% extension move here. I think bonds have topped for now. When I say for now, I'm talking about like, here over the next, week or two. And if that's the case, if bonds have topped and they come down again, that means yields are going to bounce. And if yields bounce, that means the dollar yen could bounce too. So the reason why I'm pointing this all out is because if yields bounce, that means the dollar yen is probably going to, catch a little bit of a bid as well. So I think you need to watch the bond market. Okay, you need to watch the bond market when you're dealing with the dollar yen. Also we got to watch gold. Gold has been very strong. Gold is up against really key resistance. Okay, at that 1535 level, and if it pulls back a little bit, then the dollar yen could bounce. Now we have data coming out here in just about a minute, so I'm going to put on a 5-minute chart of the dollar yen. Dollar yen is most susceptible to move to this data. So let's go to let's grab our data flash. Here comes the data, and then also this is Bloomberg. So if you guys want to see the difference between Bloomberg, we have non-farm payroll. Here, let's expand this out just a bit. I think I have to move that first. Okay, you know what? I'll just keep it right here. You can see retail sales right here. Empire State Manufacturing data, we're expecting 2. Retail sales also at 0.3%. This is core retail sales down here. So watch these numbers. You also have data flash if you don't have Bloomberg, which, most of you probably don't have Bloomberg. It costs me almost $3,000 a month to have the system on my computer. So, but don't worry, if you have ForexAnalytix, you get data flash, and you'll get the data pretty much almost as quick as I can get it. So watch this data that comes out. Coach, are you here? Okay, strong data, big numbers, dollar yen spiking up.
I'm with you, Blake. I'm here.
What's the revised unit labor costs? They came out much stronger than expected. Let me move Bloomberg out of the way here. Philly Fed number was big. Yeah, I mean these are strong numbers, very very strong numbers. Now, gold is coming down, yields are rallying, dollar yen is spiking up. Watch the pound yen. The pound yen looks like it's going to break out here.
It's a great combination call.
What's that?
Very good combination call with the pound outperforming euro and the yen holding when it should have been underneath the flash crash low by now with what the bonds did, what the gold did, and what S&Ps did. You know?
Yeah, you know, I think you got to watch this pound yen because it could really spike higher here. Let's take a look at, hold on really fast. Let's see this dollar. Okay, the euro's down near its lows of the session.
Well,
pound is just pound's hanging out. Okay, just off these highs. But I'll tell you what, the pound still feels like it wants to squeeze here. I don't know how overly excited I would get about being short the pound. It's the euro. I mean, the euros. Let's see how the euro does around here. Maybe the euro can make it down to 111. 111.10. Excuse me. I don't know though. What to do? I'm just trying to figure out what I want to do here, if anything. This pound comes off back out to 121. I might pick up a little bit more down here. So the 5-year yields have turned positive. 10-year yields are almost positive. All right. So that is probably going to be very good for equities. So watch. I think what we've got to watch is these yen pairs like the pound yen. If we break 129 in the pound yen, that's going to be a pretty bullish move, in my opinion. So keeping an eye here, let's take a look at like the Aussie yen's not doing anything, New Zealand yen not doing anything, Canadian yen's, a little bit of love. Yeah. The dollar yen is just trying to move higher. God, I want to see these yen pairs actually start to make a move. And if the yen pairs move up, you also have to keep in mind if the yen pairs move up, that could actually put some downside pressure on the dollar. I know the dollar is like the dollar is higher right now. You got the euro that's slumping, you got the pound that's pushing back towards 121. But if all these yen pairs start to move up with equities, because like I said, I think equities had a false breakdown, then you could get euro yen moving higher, pound yen moving higher, yada yada yada. So keep an eye on these yen pairs. 10-year yield just went positive on the day. Where did my yields go? Oh, they went positive on the day via Bloomberg. You can see them right here. This is I don't know how they track them. You can see we just went positive on this is the 10-year right here. This is the 5-year. So curve's improving here. So with these yields moving higher, I think it's like I said, it's going to be very supportive of these yen pairs. Let's see what gold's doing. Gold's holding up. I would watch gold on a break back below, 1505 roughly, if we can make it back there. Euro's not doing a whole lot, but I don't know. I don't think, Coach, I could be bearish the euro and or like the cable. I think that these yen pairs look like they could actually make a move. So, okay. Well, while we're waiting on the markets to move a little bit, let's go. Let's finish up the bias chart, because I know Andre should be popping in today.
Right.
Take your time. Take your time, Rick.
Oh, Andre is here. Hey, Andre. Hey, good.
How are you?
How you doing, buddy?
Fine, thank you.
Good. All right. Yeah. So give me about another 10
Sure,
minutes or so.
sure.
I'll give you the last 15 minutes. Let me just finish this up. Okay. So here's the Swissy. The dollar Swiss, let's take a better look at it. The dollar Swiss, this is one of those that if yields continue to, rise, like the 10-year and the 2-year and especially like the 30-year, the dollar Swiss could actually get a little bit of a lift. If you look at this, this is a big time support right through here. This is a daily chart from 2011. Trend line comes in at, let's say, roughly 97. So because of that, you got to be a little careful being on, bearish. I think a move below 96.50 would be extremely bearish for the dollar Swiss if that happens. Okay, but right now, the dollar Swiss is holding up pretty well. So while we're above 97, I'm going to say it's range bound. But while we're above 97, you can't be bearish. If it breaks, below 96.50, then that's a game changer for the Swissy. Now you can see 98 cents is resistance, roughly. Do that. Okay. And you can see all the spikes up towards 98 cents have been capped. So a move above 98 cents would be bullish if we break. So you can see we are range bound with the Swissy for right now. Okay. Let's go over to the dollar index. Here's the dollar index. The dollar index, it's been really choppy, and we're struggling as we, this is a previous resistance zone. It's been support on the way back down. It's been, kind of a gnarly area for the dollar index. And if you take a look at currently, we're capped at the 50% retracement. So the dollar index resistance right now is 98.05. This would be in a range. Okay. Support. This is the 200-day moving average. It comes in near these lows at 97. So dollar index is just waiting for some, how should I say, waiting for some inspiration, I think is a way to put it. Okay, dollar Mexican peso. This is going to be an easy one. 200-day moving average, big support. I'm kicking myself in the rear end from 2 days ago on Tuesday, not buying it down here at 1937. I knew I needed to be buying it. I didn't do it. I didn't pull the trigger. Yesterday it ripped up and it ripped right into resistance. If you use ForexAnalytix, you knew that went right into resistance because I notified you. You can see right here, the US dollar Mexican peso is shooting into resistance and the hourly RSI is overbought. Keep a close eye on the 1977.27 level. And that's when we moved right into resistance here. And basically, what it was saying is, don't be long while you're right up into that resistance. Now we came off, but we're still, we're actually holding up relatively well. We're going to have to see some risk off in order for the dollar Mexican peso to break out. I think equities could potentially recover. So that might put the dollar mex back down at the 200-day moving average, which makes this really simple. I mean, the support is at 1937 or 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 1936. 77. That's key until we break out of there. We're in a range. Period. End of story. Let's take a real quick look at the Swedish krona. I just skipped over it. There it is. US dollar, Swedish krona. Choppy waters here. Obviously, I haven't been looking at it a whole lot, but this is support. You can see we spiked right off of that support. That was because of the Norges Bank, by the way. Support at 950. Resistance will be up here at 969. That's pretty key. Let's see here. We are, I want to say we're still in a bullish trend, because if you look at the US dollar Swedish krona, I mean, it looks like it's actually wedging is the best way to look at it. In my opinion, it looks something like this. And unless we take out the lower end of this wedge, still wedging. US dollar, Norwegian krona. Now the Norges Central Bank met overnight. They are actually expected to hike in December, and the US dollar, Norwegian krona is weak. Which is crazy to me. Thank goodness Stelios isn't here. He'd be going off the handle about the Norwegian krona. But what you'll notice here is we are nearing 161% extension of this last move lower, okay, which comes in at 901. Now, if you take the previous range, the 161% extension could reach all the way out to 909. But I think right now, for at least for today, you see this 901 is pretty key resistance. And keep in mind, we're at 9. I mean, nine's a big figure number for any, round numbers for currencies are big just in general. So 9.01 is key resistance, but just keep in mind we're at 9 basically. The US dollar, Norwegian krona is still bullish while we're above 882, which is the previous range high. There's no reason to be bearish, but you have to start being a little cautious with these longs, in my opinion. So 882 is support. And while we're above that, and that's key support too, while we're above that, we remain bullish. All right, so this is your bias chart for right now. And let me explain this one last time to you guys that are tuned in a little bit late. The bias chart, I'm an active trader. I can trade counter trend. I'm long some cable right now. I don't mind. Just knowing that I'm long a little bit of pound and it's in a bearish trend means that I just need to take smaller positions, right? You don't want to take big positions when you're going counter trend. And so if I was bearish, or excuse me, in a bearish trend, and I was looking at the cable, I'd be more apt to be, it's going to be in a bearish trend no matter if we get a counter trend rally until we break this channel resistance. So what I'd be more apt to do is we get up towards 123 is I tend to be a little bit more aggressive on the short side up there, because I know that's key channel resistance for the cable, okay, or for the sterling. So, and that's also near the breakdown point. But that's why it says bearish. Doesn't mean you can't trade counter trend, okay? Just knowing that you're going against the grain should be enough to tell you that, hey, I need to take smaller positions when I'm trading counter trend, or counter, you can say, this bias. But this is your bias chart for the day. And I like to do this every day before I get in the markets. And one thing that you'll notice here with ForexAnalytix is you have biases, you have support and resistance levels that myself or Steve, which happens to be me this week, I redo these support and resistance levels throughout the course of the day, and they'll get breached, and then I'll come back and I'll retool them, and that's basically like having a more immersive bias chart than what you see right here. But doing a process like this every day tends to help me. And remember, if you are a ForexAnalytix subscriber, you can listen to Paul Franco's webinar during the European crossover that was like 4 hours ago, and he does a bias chart based on his analysis too. All right, and I want to leave some time for Andre, because Andre is our our harmonic artist in-house, and he does all of our harmonic charts, beautiful pattern setups that you see here. So good morning, Andre.
Hello, everyone. Hello, Blake. How are you?
Hey, thanks for joining us today.
No problem. Thank you very much. It's a pleasure to be here.
So you've been I know you're in Portugal. For those of you that are trying to figure out where his accent comes from, I know you've been vacationing a little bit and probably just getting back in front of your charts over the last couple of days. Hopefully you have some nice charts and some nice setups to go over.
Fortunately, I spent my vacations on the last 7 days. So during that period, we saw the market moving sideways. So it's always nice to be out and checking the market later. 8 sessions, consecutive sessions, in the market moving sideways. So nothing moves while I'm out. Good.
Well, we got a little bit of volatility, so hopefully, hopefully you got some charts to show us, and I want to thank
any crabs on the beach, Andre?
Any
crab formations?
Of course there are. And I will show you one, and that's the one that I want to show you to start. I don't know if I can take your screen.
Yeah, you can. You can take it from me, or I'll stop sharing, and then now you can share your screen.
Okay. Cool.
There we go. Hey, I'm gonna step out. I'm gonna use the restroom myself.
You have a good trading day, Blake.
You guys didn't need to know that, but yes, everybody have a great trading day. That was too much information. We'll see you tomorrow morning. Thanks everybody for being here, and make sure you stick around with Andre and then Mr. Maldonado for Dale's interview.
Thank you, Blake.
Thanks, guys.
All right, good hunting. All right, Andre, it's you and me, partner.
Exactly, as always.
Yeah.
Okay, let's start with silver, and because you were mentioning about the crab patterns, I believe there's conditions to try an attempt to go short on silver based on that pattern. We have a few other previous, as we can see, the previous structure fractal resistance, the monthly resistance there. So we have the 38% retracement now synced or at confluence with that, with the targets for the pattern. So with that fractal, it's always nice to find those confluences between resistance and targets for those patterns. Gold is now trading the 200% Fibonacci extension, 1533. This was exactly the price that I was expecting to see gold finding some pressure, finding some resistance. This is the default target for this cup and handle formation, so I will not ignore a small pullback or an attempt to lose some of those bullish, one attempt to pull back, trying to lose some of those profits there. Let's see what we have there. But taking a big picture on gold, and well, this can be a little bit extreme, and we need time for that to develop. But ultimately, wow, I would like to see gold trading at 1821. So this will form another bearish pattern based on the Fibonacci criteria that we have. This is the only pattern that I can imagine the price forming on a long-term perspective. That doesn't invalidate the possibility for a relief and eventually reinforcing one, at this point, virtual ascending trend line. At some point, the market needs to find some support and reinforce that trend line, eventually sync it with that 200 moving average. Let's see what the market will offers. But ultimately, we will see gold trading higher and forming that pattern. I have two positions holding on gold actually. One of them, the breakouts. Actually, I bought the market before the breakout of this gap and handle a few weeks ago, and then most recently 1428, I believe 1428. I'm still holding that long from this wedge formation there. So I bought a small portion there. So I keep holding a small portion, and if the market decides to trade even higher, that will make me a very profitable position for sure. But again, that doesn't invalidate the possibility or the probability for a pullback there. The reason why I'm saying that is because if you go into, this is a weekly time frame, obviously, on Dixie. Basically, we have one pattern that I shared among our subscribers inside ForexAnalytix. We have one pattern forming. Let me try to push that chart for us. Dixie in a weekly, I believe. Dixie and the weekly chart. We have patterns at above 100, basically 103, 71. We have sharp patterns positioned there at 103, and we have eventual cipher patterns at 78% retracement from all these swings. So if the market decides to pull back to the 78% retracement, I have there already the Fibonacci. But
102.
151, 100 basically.
Okay.
The 78% retracement. So I will not ignore the possibility to see Dixie trading higher and forming the cipher pattern that I share among our subscribers. But if I go into a daily time frame, or let me use a daily time frame chart, the inverted head and shoulders has failed to achieve the 99.14, the 200% Fibonacci extension in the default target for the pattern. I need to decrease a little bit this time frame to show you minor or a lower degree event there. So this was the 224 extension, another sharp pattern that I was expecting to form there at the weekly, the monthly fractal resistance, this fractal here. That was our previous highs and previous monthly resistance. We have already, this is not a 4 hours resistance, it is already a daily fractal resistance there. And this is our, let me adjust those levels. So this is my 4 hours fractal there, and we have the resistance here and the support there. So we are now approaching the 161 extension. This is actually the monthly fractal resistance at 98.37 and the bearish sharp pattern completion point. So if the market fails here at 161 extension in the monthly fractal resistance, I can see Dixie approaching the previous high, the daily fractal above, and eventually, if the market breaks these highs, it will keep trading higher. At this point, I can see the formation of that pattern, which will validate my vision or my view on gold to keep trading, for a deeper pullback on gold. Eventually, it will keep trading higher if Dixie rejects to trade higher. So basically, I'm waiting for this bearish sharp pattern to hold Dixie.
Where would it retrace to from that 98.40 level?
From 50% retracement is the default target.
Okay, after that, if we fail from there, where is it going? Do you have a pattern that shows where it would go to? Would it take out that recent low?
If it fails from here,
yeah.
Oh, if it fails from here, it needs to vanish this support, and if that happens, I will project patterns below 88% retracement, the default bearish bullish pattern completion point.
96, 96.
90. I will give you the exact price. 96.20, 96.19.
Okay.
Yeah.
All right. Thank you.
This can print us the bullish bat pattern is a default four swings or W or M shape pattern, 88% retracement. Obviously, if that happens, I will not be surprised to see a retest of this major weekly fractal, and not ignoring the fractal, the monthly fractal at 95.03. But Dale, I believe the market is delivered to us in packages, so data boxes, if you wish. So, and each one of those patterns for me represents a small piece of data, and I need to do something or not with that data. I can do something with that data or stay quiet. Basically, and I trade based on the default targets for that pattern. So let's say if I decide to join a short on Dixie, I have my default target position, and that allows me to identify not only the targets, because we have previous history there, which allow us to identify the 50% as the default target for the sharp pattern, which will complete another sequence, which is the 5-0 sequence, which is another pattern. But it allows us to identify also our limits. So I never enter the market to lose more than what I expect to win. So if I expect to trade 50% of this swing, those are my limits, and it makes sense because I need to respect those highs. So at some point, if I need to short this market, I need to respect those highs. That trade will be maximized, that I will try to increase my profits if the price decides to keep falling and to keep trading lower. So at some point I break even my trade. I just need to manage the trade. But I trade based on small pieces of data, small pieces of information, and I always take in consideration my default targets. I can project the price at 88% retracement, but there's a few conditions, there's a few criteria, if you wish, or requirements that the market needs to fill. At this point, I need the market to trade below this 4 hours or daily support. Eventually, it needs to wipe out this daily support, which is, by the way, the right shoulder for this inverted edge and shoulder. If that pattern is considered as a reversal behavior, I need to respect that shoulder. If the market decides to wipe that right shoulder, eventually it will keep trading lower, and eventually it will retest those fractal support levels. The weekly and the monthly fractal keep trading even lower, and we need to start to identify what the market will try to print us there. So let's imagine if the market decides, I can start to project patterns below for Dixie. I have a Fibonacci extension there, the bat, the alt bat pattern, and the crab pattern. Let's try to check what that Fibonacci extensions offers. I'm trying to, at least. I need the 88% retracement here to show you the bat pattern at the default 88% retracement, but I can project patterns below. We have the 113 extension below, the alt bat pattern, alternative bat pattern. Actually, I have both of those fibs already. And we have the 161.8 extension for the crab pattern at 93, 91. So I can start to project those patterns there, but I never know if the price goes there. And there's some specific criteria and requirements that we need to see the price validating in order to increase the probability to see those patterns forming. So at this point, none of those, at least in my point of view, are reasonable at this point. So I need, first thing first, I need to wipe this 4-hour support. That will increase the probability to find some support level, to find some pressure at previous lows, and a pullback to the 38% retracement, minimum expectation for the BAT pattern. If the BAT pattern fails here, I can start to project the 113, and eventually, if those BAT pattern fails, we will see eventually the price trying to pull back even harder and searching for the 168 extension, and it will print the crab below. But again, pieces of data, small data boxes, and try to identify the patterns that we have at that moment, and we will try to identify your targets, and that allows us also to identify your limits.
Yep. A day at a time, a week at a
day
time.
at a time. Yeah.
Yep.
Yeah.
All right. Well, thank you so much, Andre.
Yeah. Okay. You have an interview.
Yes.
Today. Let me just finish with another one.
Okay.
That, already completed beside this weekly time frame pound versus kiwi versus Japanese yen. Eventual inverted cap and handle. We are now trading at the 168 extension as published for our subscribers, and pound versus kiwi is also in a very interesting situation, trading above the descending trend line resistance and bouncing from the 78% retracement. This is the cipher pattern in play. 38% retracement already touched, 168 extension already in play, also forming the shark pattern there. The pullback to the 50% retracement, offering another 5-0 sequence, another bullish eventual opportunity. I'm still projecting this shark at 224 extension, 192.76 for pound versus New Zealand. And that finishes my approaches for today, Dale.
Well, welcome back from vacation, Andre.
Thank you very much.
Good to have you back, buddy. Hope you're all recharged and be looking at your research now that you're back, and get your head into it, and appreciate the looks.
Thank you very much.
Have a great day, Andre. Ben?
You too.
Welcome back. Promoting you to panelist, buddy, and let me unmute you. You're unmuted, so just waiting to hear your voice, partner. And
can you hear me now?
Got you, Ben.
Awesome. Boy, I'll tell you, Andre's work is really both visually and intellectually pleasing. I love watching that stuff.
His last name's Picasso.
Mm-hmm.
Andre Picasso, Rembrandt, Da Vinci. That's his full name.
Thank you very much. Thank you very much, guys.
You're welcome, buddy. And, except he's a loyal married man, unlike a lot of artists we know. So, Ben, I have to acknowledge the great calls you made last time you were on. You said you were going to go with a weekly breakout in gold. I think it was over 1370 or so.
Mm-hmm.
Nice call. And then you showed some type of fractal or analog in the S&Ps that I think was right around comparing the Nixon years and when he was in a little bit of trouble, and the S&P today. Did that fractal play out for you?
Yeah, it's actually playing out really well. I'm trying to get this slideshow started. Let me see.
Okay.
Let me see if I can do it. Because there we go. I got it.
Yeah, so we're looking at a chart with It's the S&P with a lot of concentric. Okay, there's a 72.75, so we got it here.
Right. So what we're going to do today is I'll take you quickly through a review of the analog, and we'll look at various markets sort of from a high level, big picture where they are. And then I want to do something a little different at the end, give people something that they could use every day and make money every day. Because as traders, we have these wonderful long-term patterns, but we still got to eat every day. So we'll get a little bit of both. The first part is sort of the background weather of each market, and then the second part will be something that you could apply each and every day.
Okay, cool.
So this is a review of the fractal that Dale and I discussed in May, and the parallels that we're experiencing now are connected via cycles with the events and actions of the early 70s. I do a lot of cycle work. Cycle work has sort of been, my life's work. It's always fascinated me of how things repeat and rhyme and change and come back around. So it's a big part of my long-term work, and this is one cycle and analog I've been following because the parallels are great. And I'll give you a quick review. In the 70s, we had the Nifty 50, where everyone was piling into the same 50 growth stocks. Today, we've got FANG. Similar actions, different names, similar type of results probably going to happen there. The president at that time, which was Nixon, as you mentioned, Dale, was at war with the press and with the Fed. He was jawboning the Fed to cut rates before the election, saying they were messing up the economy. And we have the exact same thing today. We have a president who sees the press as the enemy and is squarely blaming the Fed for any issues that we're having in the economy.
But Nixon had an ally in the Fed, Arthur Burns, right? So Arthur Burns did what Nixon requested, right? Or was
Absolutely.
Burns a replacement that did what he wanted? Like, or do you think Jerome Powell is going to turn into another Arthur Burns?
I think Trump has boxed him in pretty well.
Okay.
And, Burns did, I don't know if it was Burns, I can't remember who the Fed chair was, but the Fed did cut rates prior to the election as Nixon had wanted. So, and it looks like Powell is getting boxed into the same corner where he's going to be forced to cut more than he wanted to, or at least how much he expressed he wanted to at the last meeting. But we'll see. The last interesting parallel that I'll bring up is that the president at that time, which was Nixon, was the first U.S. president to go to China and interacting with China.
Interesting, yeah.
Trump, obviously, very strongly tied with China right now. Not in a positive way, but China and Trump are tied at the hip. Nixon tied himself to China with the opening up of China. So anyway, the analog, this is what happened in 72 to 75. We had this broadening top.
Megaphone.
We had a megaphone. We made a spike high and we turned down. What I showed in May was this is the current pattern, which is the megaphone that you were talking about in the beginning.
Yeah.
And this was the projected path that we're expecting if we continue to follow and if these cycles play out in a similar manner. They're never going to play out exactly, but it does give you a good roadmap and a good idea of, what's the weather forecast for the next couple of years. So there was the path we laid out in May. And look at what we've done. We've gone from this area here, we made that spike low, we now made a new high, and now we're rolling over. So the pattern is playing out, and I'll let you see it again so you can see how it happened.
Oh.
We made the low, they made the spike high, a little false break, and then this jagged decline happened. And if what we've been experiencing recently is what's going to happen, it's going to be a jagged type decline with big moves up and big moves down. So I'm watching that. I'm very, very aware of the cycles we're in and the possibilities that we could be morphing into something much bigger. Now you can't just hang your hat on cycles. You have to look at price. You've got to be aware of what price is doing and where we are and how we're reacting to support and resistance.
Well, I'll tell you, I've lived through a few bear market cycles, Ben, but the action that we've had since last Thursday and the tweet about trade tariffs.
Mhm.
The action, especially that we were going to delay the tariffs, and within 1 minute we rallied 50 handles, stayed there all day, and
Mhm.
then you go to sleep and you wake up the next morning and you're down 40 handles. I haven't seen that kind of market. To me, it feels very unstable. You could have bear markets where you have, a trending move, not that type of everything's gapping or happens in a minute. Does the market feel to you like structurally there are some issues with it right now, the way it's trading, not directionally, but the way it's trading?
I don't think there's any question. And there was a change in the energy of the players. The sellers have become aggressive. The dip buyers continued to try the same thing that's been working, and
Uh-huh.
I've just watched them get overwhelmed and swamped.
Okay.
So there's definitely been a change in sort of character of the price action, and a
And we
change.
didn't have overnight markets back then either. The markets
True.
closed in the 70s. They opened and they closed, and
Mm-hmm.
they were closed till the next day.
Right.
So that's probably changed it too.
So what we've got here is this is the ES monthly. And again, I use this as sort of a long-term directional map and saying, okay, where are we? Where do we have room? Where, which way is the path of least resistance? And the interesting thing about this chart, it goes, back to the late 90s. If you noticed, every time we hit the edge of one of these circles, there's some sort of pullback or correction. Some small, some really large, like in 08, 09. There's the one from 15, 16. So here, the reason why I think you got to be cautious and you got to be prepared for downside is not only do we have the edge of the circle, which causes a reaction. So you got the geometry of the circle here, but you also have the geometry of a square. And these thick red lines, the horizontal thick red lines, are points of strong support and strong resistance. So we're in a really important,
Based on what?
based on geometry,
Okay.
based on the geometry of the market moves and the price action. So looking at this line here, there's one of two things that has to happen. One is we either rally up above it, sit on top and go, or we get stuck under and we're going to get pulled down by the circle.
Okay.
So this is a critical point that, I've been posting these things for months saying, we're going to be at a major decision point here, and we're there, and we have to see what's going to happen. So far, price is showing that it doesn't want to go up there or stay there. We've gotten above a few times and gotten smacked right back down. So I'm watching
I remember
this.
you talking late July for some type of cycle.
Absolutely. And it came, and here we are. So we got to watch this sort of thing vigilantly to make sure that if we get above, it's going to be clean sailing. If we get stuck below, the path of least resistance is lower.
Okay.
So that's the long-term view of the ES. Here's the 10-year. I, like you, Dale, stepped into the breach here and said, you know what, this looks like a good short right in here, right? I'm at very important geometric resistance on a daily chart.
Yeah.
I could take a good shot here with a little low risk, because I know if we get above this line, I got to get out. And I got my fingers burned. Boom, shot right back up.
Okay.
What this chart is showing me about bonds, and also notice these dashed purple lines are also, again, a spot of geometric support and resistance based on the geometry of this ABC triangle down here. That stopped price cold. This has been supporting price. So
Right.
we could stay in this little channel for a while, but unless it gets down below here and we start taking out support, this thing could go higher. And the targets we're looking at on this sort of thing are levels people can look at are 132.04 and 135.17. I mean, I think until that starts taking out support, or we take out these geometric support lines, you got to be looking higher in this market, even though it seems crazy. Key levels on the downside are 130.09 and 129.18. As long as they hold, you got to look bullish.
Okay. So everything in here is geometry. Those purple dotted lines up channel are it's not a pitchfork or anything like that. Median line work.
Nope, it's geometry.
Okay.
These are extensions of geometric relationships of previous triangles.
Okay.
And you can see they work really well. They'll
do.
support price, they'll stop them. So again, it gives you another reference point. And I'll allude to it later, but everything in the work that I do and my partner and I do is trying to sort of squeeze down the area of possibility so we can get a good risk reward ratio to engage.
Okay.
Next, let's go to crude oil. This one's been an interesting one. It's been frustrating, I think, both the bulls and the bears, because we're seeing this sharp up move, sharp down move, sharp up move, sharp down moves. To me, the key to this market is this area here, this 54 area. Above it, I think you got to be looking bullish. Below it, you got to be looking bearish. And it's for me personally, I don't want to get involved. I was short crude, made some money on this move down, but I don't want to get involved in here until we get up and stay on top of that, or get below and stay below that. I think that 54 level is key there.
Okay.
Let's go to the next one. Here we've got gold. As Dale said, I was bullish on a breakout on gold, on a breakout on the weekly. It's played out nicely here. Andre noted it was slowing down because of a fib extension. It's also slowing down here because of geometry. So right at this level here, this dashed red line, there's also geometric support and resistance. So until we get through there, you might see some backing and filling, some sideways motion as they consolidate the gains. But I'm looking for much higher prices in gold within the next 30, 60 days. I've got targets in the 1603 to 1628 area up here on these arrows.
Okay.
This 1600 area will be some resistance, but if we can get above that and sit on top, then we're going up even more on gold. And the interesting thing, you talk about, the markets being a little squirrely. The moves we're seeing are pushing the bounds of everything, like in bonds, and I think gold is going to be another one of those things. I think the stock market's been doing that. So
what would change your view on gold?
Gold, if the key levels on the downside is short term 1508 and 1486. We take those out, and I think 1508 you turned a little bit cautious. 1486 you gotta reassess.
Okay.
So we got to stay above those levels.
Okay, good to know.
Yep. The next slide I wanted to show you guys is the sort of this philosophy I was talking about. Since the market can do anything, meaning it can go further than you think, lower than you think, higher, sideways, it can do anything. When we're trading, we're dealing with a limitless environment. So all of the tools that you employ, or all of the methods you use, whatever you use to trade, you have to figure out a way to shrink that environment down to a much smaller area and define the place where you engage, because we can only engage where we have an edge. If you don't have an edge, ultimately, the market's going to take your money. And so I want to show you a couple tools. One, I call this my ping pong chart because it bounces around like crazy. This is the ES 60-minute chart. And this is one of the tools that I use to sort of shrink that environment down every day. I post it every day so people can see it, where it gives you sort of, I call it the table limits for the day. And you can see at the different spots, both solid red lines and the dashed. When volatility is lower, these dashed lines come into play more. When volatility is higher, you switch to the thick red lines. But you can see once you get stuck below, like here was Sunday night, or this was Tuesday night. We got stuck below this line, They made one more attempt up, and then wham. And where did we go? We sliced right through this one and came down to this one here. Now we're stuck in here. They tried to get below this. we're back above that line. As long as this holds, we can look for some sort of rally today.
Okay.
And notice how good this is in volatility, big volatility too. Look where the low came in.
Yeah.
See how it catches the spike, and then it says, okay, they say, let's push it. Let's see if we can get there. Nope, comes back up, tests, and then it goes.
So you trade this with trailing stops?
You can trade it with trailing stops. You can trim. I like to sell partials at different spots. Like if we hit the median line, I'll sell some partials.
Okay.
If I'm short and we get down close or hit this line, I'll sell some.
Okay.
You know, just use it to assess risk at any moment, right? You don't want to be shorting on top of this. You don't want to be buying up against this, because
you just said those are some magical squares.
Yeah, and they work because geometry works. Let's see.
Well, I did much better in geometry than I did in algebra.
There you go. And every day I use it. You
Okay.
wouldn't have known that in 8th or 9th grade, but you do use it.
Okay.
So here's another tool. This is one where we post them every day. It's a great tool for day traders, and I'll briefly describe what it does and then go through. So it's not cherry picking, just like I did last time. I'll go through the last 3 days and show you examples of it. These lines are dynamically generated. They repel price either up or down. In other words, just like those geometric square lines I showed you, if price gets stuck under one of these lines, odds are you're going down. If it can stay on top of one of these lines and sit on it, odds are you're going up. And so it gives you a favorable risk reward ratio to engage with the market on a short-term basis. I'm talking, you can use these on a 4-minute, you can use these on a 1-minute. They trade really well, and we'll go over a few examples. So some of the applications we go over, you can, if you recognize a pattern and you're near one of the lines, you mitigate risk. This game is all about keeping your risk to a minimum and creating opportunities for making big profits, and that's what these lines do. You can enter on a trend, or you can enter on a counter trend, again, depending upon the position of price in relation to the line. And the lines, I think the reason why they're so interesting to me and exciting and profitable is they're generated multiple times a day. Recently, because of the volatility, we've been posting for the overnight, and you watch how these things work overnight. It's really, really something to behold. So let's go to first example. So this is Monday, the 12th. The solid red line is the line, the fuse line coming in for the day. The lighter shaded red line here is the one that's generated dynamically later in the day. So we come into the opening, which is the dotted green line. Here's the close, is the dotted red line. We come in, we're below the fuse here, so there's nothing to do, right? So you wait for a pullback into the line. We're coming in a weak position anyway. You can see, because this is a 4-minute chart, that we've been making lower lows, lower highs. We bounce up, and as you know, those boys in the pit and those traders that have big money are really good. They come up, they make a false break, having everyone think it's going up right after the open. They bring it down, it tests the fuse line, and then you get a quick 20-point move to the downside. So here is the spot where you trade. You've gone up, you failed to hold the line, you come below it, you retest, and down you go. Later in the day, on the new dynamic line, which is generated, we made this low, then we chop back up. It's another lower high, so we know, okay, things aren't very strong here. We've got a lower low, a lower high. We come back down, we get below the line, try to make it above, doesn't make it. You could sell the reversal, you could sell the line, anywhere in here you sell, and another 20-point move into the close. So these are dynamically generated. We post them every day. Perfect for day trading, because the key is it allows you to enter with a small amount of risk, because you're selling against the line or buying against the line.
Okay.
Let's go to the next one. The next day is interesting. So here, the open is right here, and you can see coming in, we're just flatlining overnight, right? We're triangulating overnight, flatlining. Here's your line. As they do, they make a false break here, thinking, okay, we're going to go down before the open, but then it gets above, not much of a pullback. So you got to find a spot, use your own entry techniques, but we're above the line. We're not getting below the line. So you buy it here. You can buy it on the reversal here. And there you go. There's the move. And Dale, even though we trade the markets 24 hours a day now, it's amazing how much energy is released in the morning, right? After that US Open. And these fuse lines are perfect for trying to trade that open. Because a lot of times, let's say I may have taken this short because it looked like we were failing at the line, right? We went up, came down, you get stopped here. You take the small loss and then you look and say, okay, we're above the line now. Do I have a breakout? Have I made a higher high? Okay, I can take the buy here. I can take it here. So you got to be flexible when you trade these things on a short-term basis. And anybody that trades short-term knows that.
Yeah, you have to know why you're getting in. If you're getting in over that breakout and it fails, you got to get out of the way.
That's right. You got and you got to be willing to reverse too, right? You can't be so stuck in your mindset. It's hard to do. It's hard to do, but if you train yourself, and the key thing, Dale, is these lines can help you, give you that point where you got to change, you got to flip your mindset, because above it, you better not be short above it because you're swimming against the tide. And if you're below it, you better not try to go long, or you better have a well-defined risk if you are, because the pressure is going to be to the downside. So they help you get that mindset change. When price is above, I got to be thinking up. When price is below, I got to be thinking down, because it is a hard thing to do.
Okay.
This was yesterday. So we started off down from the get-go. But you can see here, right before the open, we did a little retest and failed. So you could have sold it there if you wanted to sell it pre-open. But even if you waited till the open, any of these pullbacks, they're all below the line, all below the line. So you got a defined risk. You could try and sell the top tick up here. I generally try and wait for reversals on the shorter time frames. So you get the reversal, you take a little bit of heat, but not much, and then it's off to the races. So any pullbacks when you're below the line, any pullbacks is a place to hop in with a defined risk, right? Because that the further away from the line you are, the greater the risk. So if we open really far away from a line, I just watch, right? I want to engage when the odds are in my favor. And that's the key thing with the market, and the key thing that both new and old traders have to constantly remember is you don't have to trade.
Exactly.
You only trade when you can flip the odds in your favor. And that's what some of these tools that I'm showing allow us to do. And because
nice proprietary stuff, Ben.
Yeah, it's really cool. It's as you know, Dale, it's overnight success after 20 years, right?
Yeah. You have to put in the time. It's like digging for gold. You have to keep digging, because you could only be inches away from hitting that vein. So
that's right.
Nice work, Ben.
And in the vernacular of the oil industry, you get a lot of dry holes too.
Yeah. The best way for people to follow your work and consider getting involved.
Yeah. So here's the +3 forecasting is that there's the Twitter handle for that. My Twitter handle that Dale posted it is at Benji Maldonado. We have no service right now. We're just posting stuff and sharing our work, and we most likely will have a service at some point, but for now we're just happy to share with the trading community, get feedback, and hopefully people find value and get value out of what we're sharing.
Well, I nominate you for the Nobel Peace Prize for humanitarianism. And I encourage everyone to vote for Ben for that award and to check his stuff out. I've seen him make some outstanding calls with turns. I love his work. It covers the gamut and geometry. The world, whoever created this world, created it with geometry. Whatever it was, it's all geometry. Fibs are geometry. Everything is. So appreciate you coming back, Ben.
Glad to be on, Dale. Always enjoy spending time with you. As I said, you're one of those guys that when you're done talking to them, you feel better. And there's very few of those in the world.
Okay, well, I could tell that your mission is to help others, and so people check Ben out and see if these tools are right for you. Jack Schwager says find a trading style that suits your personality. That's why I bring different people in here like Ben for you to do a little shopping and intelligence gathering and see if it's for you. Thank you, my trading warrior brother.
You too, Dale. Appreciate it.
Okay, have a great week. Have a great summer trading season, and we'll get back together soon, Ben. Promise.
Sounds good. Sounds good. Thanks.
Okay, buddy. So
Bye-bye.
that's a wrap for us, everybody. Kind of a quiet Thursday. We'll see everyone tomorrow to wrap up the week with Moon Man Norm Winsky. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. You're very welcome. Adios. You're very welcome.